This past month, I earned over $520 in dividends. That is my highest ever, marking an important milestone in my investing journey. $500 is a non-trivial amount, especially considering it requires no active labor. This principle makes dividend payments a highly scalable source of income. So that's an additional $500 going to buy more stocks on top of the new contributions from my actively earned income. This is a clear example of the power of dividend reinvestment. So how can you start earning dividends? Well, this dividend income is passively generated from my portfolio of dividend-paying stocks. When investing in publicly traded companies, it's common practice for their board of directors to issue distributions of profits to shareholders. You will be paid a set dollar amount per every share you own. This is called a dividend. Not only is this fully passive income, but it's tax advantaged too. In the United States, qualified dividends are taxed at a lower capital gains tax rate compared to ordinary income. On top of this, dividends are far more reliable compared to stock price declines found in bear markets. For example, in every bear market from 1946 to 2009, it's been shown that the S&P 500 sees an average price decline of 33.9%, while dividends paid only declined by 0.5%. This was proven again in 2020 and during the current 2022 to 23 bear market. Over the past year, the S&P 500 dividend growth rate is 10%, even among all the price turmoil. Personally, I think this makes dividend income a reliable retirement strategy. A great number of companies have predictable dividend payments typically paid out on a quarterly schedule. These dividends often grow over time, with many stocks increasing their payment every year. For example, the dividend aristocrats are a group of stocks that have increased their dividend payments annually for over 25 years. Likewise, the dividend kings have over 50 years of consecutive growth. As an investor, I follow a dividend growth investing strategy. This means that I seek out companies that are likely to grow their business and dividends over the long term. The goal is to build a compounding source of reliable passive income. I will reinvest earned dividends to increase the compounding effect, creating a dividend snowball. With continued investment, this stream of dividends could grow where you could eventually live off of it. As a base case, I'm planning to have the ability to comfortably retire off of my dividend income. That's the plan. However, that day is still long away. I'm actually far closer to the beginning of my investing journey. At the age of 23, I've built up this dividend growth portfolio. Every month, I share my overall progress. In today's portfolio update, I'm going to explain exactly how I made over $500 in dividends last month and share all the new stocks I bought recently. Let's roll the intro. My name is Zach, this is Dividend Data, and you should leave a like and subscribe if you enjoyed the video. To support the channel, sign up and become a member of my website, dividenddata.com. Here you can track your portfolio, getting dividend-based analytics and projections. On top of this, you can use my stock research tool, which I designed to easily analyze a company's financials. I just released a new update for dividenddata.com with many notable changes. First, the default page when opening the application is now your portfolio page. This has been merged with the income page, putting all of your dividend portfolio tracking in a central location. The layout has been redesigned on many pages with new charts and tables. Also, the research page saw a large update. It has now been moved to second on the navigation bar right below the portfolio page. This puts the two most important sections front and center. Also, the search bar has been revamped. You can now search by both ticker symbol and company name. Loading speed is improved and nearly every page has been redesigned with a box layout, allowing you to view more information with less space. These improvements are just the start, and I'm hard at work adding more features. Becoming a member at dividenddata.com is the best way to support. Now let's dive into my portfolio. The current value sits at $118,587. With $95,330 initial dollars invested, this puts my total return at 24.4%. My dividend portfolio consists of 13 stocks, with Microsoft being being my largest holding at $28.5 thousand. This is a position I've been focused on building since fall 2022, and I'm now up over 17% overall. I'm actually hoping the stock falls again so I can continue adding to my position at attractive prices. My other holdings include ExxonMobil, Altria, Disney, T. Rowe Price, Apple, Broadcom, Texas Instruments, Kroger, Visa, PepsiCo, Chevron, and EPD. Overall, my portfolio is heavily weighted towards technology with over $48,000 in the sector. This is followed by energy and consumer defensive, with financial services and communication services up the rear. If we look at the following pie chart, you can see that my top 3 holdings make over 50% of my current value. Some may like to be more diversified, however I'm looking at this on a longer time scale. The goal is to build core positions that I want to hold for many years and likely decades. However, I'm not always going to be actively buying these stocks. For example, ExxonMobil is 15.4% of my current portfolio value, but I'll likely not buy that stock again for many years to come. I bought ExxonMobil in fall 2020 at a $40.91 cost per share when oil was at a cyclical low. Through reinvesting dividends and price increases, I've generated a total return of 222.92%. My yield on cost is 8.9%, and from reinvesting dividends, this has been boosted to 10.19%. At current prices, the dividend yield is 3.16%. While financially stronger than ever, I'm not going to be buying more Exxon at these prices. As I continue investing new capital, the percentage of Exxon will likely decline as the rest of my portfolio grows. However, I will continue to collect and reinvest the massive dividends paid. Right now, my dividend portfolio is projected to generate $3,329 in annual dividend income. That's $832 every quarter, $277 every month, $9 every day, and 38 cents every hour. Here you can see my projected dividend calendar over the following year. Since all my payments are quarterly, they operate on a 3-month cycle. April is $284, May will be $104, and June will be $442. In this table, you can see the payout schedule for each individual stock you own. The diversification of this income is heavily weighted to consumer defensive and energy. This is because they are higher yielding compared to my technology stocks. On an individual basis, Altria is my largest payer with $1,138, representing 34.21% of my dividend income. It is the only stock currently in my April payment cycle. This is followed by ExxonMobil at $575, T. Rowe Price at $381, Microsoft at $274, EPD at $237, and Broadcom at $203. Now, if you're paying attention, you would have noticed that my projected dividend income is not over the $500 I mentioned at the beginning of the video. Let's break that down and explain how I actually earned $520 this past month. Here you can see my full earned dividend history. In total, I've earned $8,401 in dividends. In 2022, I earned $3,297 in dividends. So far in 2023, I've earned $888. As longtime viewers know, my portfolio has changed significantly over time. You can tell from my diversification, I've owned a large variety of stocks. In fact, I've earned dividends from over 59 different companies. Many of my largest earners are no longer in my portfolio. This has now been consolidated down to 13 holdings as I discussed earlier. Here you can see my earned dividend income month by month. It's shifted over time and growth slowed in 2022 as I focused on lower yield, high growth companies. However, the overall trend is still heading up. In March 2023, I earned $520.40 in dividend income. This came from 9 stocks. On March 1st, I earned $6.79 from Visa, $21.74 from Kroger, and $85.12 from Intel. Now, Intel is no longer in my portfolio, and I did in fact sell the stock after their recent 66% dividend cut. I explained this in my last portfolio update. However, I still did earn that previous dividend, which helped me double up in the month. On March 9th, I earned $67.73 from Microsoft. March 10th was a big day with $142.64 from ExxonMobil and $30.68 from Chevron. On March 30th, I got $91.98 from T. Rowe Price. On the 31st, I got $23.12 from PepsiCo and $50.60 from Broadcom. Broadcom is a new holding of mine that I added with the proceeds from my Intel sale. Getting both of these dividends helped helped push me to this $520 month. However, I still would have had my largest month ever, excluding the Intel dividend. I'm able to reinvest all these earned dividends to acquire more shares, increasing my future income, allowing me to buy even more shares, etc. This cycle is called the dividend snowball effect. Growth of dividend income is accelerated by the organic growth of dividend payments. Nearly every company I discussed today has a history of consistent dividend growth on an annual basis, some very large and some small. On top of this, I continue to regularly invest new capital to buy more stocks. This past month, I invested $1,523. I bought 6 shares of T. Rowe Price at a cost per share of $105.34, 2 shares of Visa at a cost per share of $214.21, 1 share of Microsoft at a cost of $246.52, and finally 5 shares of the Altria Group at a cost per share of $43.32. I'll be looking to buy more of all these stocks at similar prices. All of this is just my opinion, so be sure to do your own research before making any investment decisions. My dividend investing journey is just beginning. Make sure to subscribe and follow along as you invest. You can sign up for dividenddata.com to track your portfolio just like me and join a Discord community of like-minded investors.